Welcome to the Explainer. Today we are popping the hood on 3 absolutely premier Indian portfolio management services. We really want to see exactly how top-tier fund managers are picking their stocks right now. If you've ever wondered what goes on behind the closed doors of elite institutional investing, well, you are in the exact right place. We're going to break down the architectural blueprints of these funds, looking strictly at their frameworks, their asset allocations, and their hard risk metrics for June 2026.
Okay, let's quickly run through the agenda for today. We'll start with Section 1, looking at the broad menu of investment ideas. Then in Sections 2, 3, and 4, we'll decode the unique blueprints driving SageOne, Abakkus, and ValueQuest. And finally, in Section 5, we'll put their portfolio risk metrics head-to-head.
All right, let's kick things off with Section 1, Menu of Investment Ideas.
So, to truly understand these funds, we first need to see where they actually sit in the broader market ecosystem, right? This explainer is derived directly from the June 2026 Institutional Grade Investment Ideas Directory. What we're looking at here is a totally comprehensive, impartial look at some of the most robust wealth generation engines in the Indian market. We aren't talking about retail-level speculation today. This is pure institutional-grade strategy.
Now, the directory itself spans a massive variety of categories. It's got everything from Category 3 AIFs and equity alternates all the way to discretionary strategies and fixed income. But for our analysis today, we're going to laser focus our attention specifically on the listed equities PMS category. We've handpicked 3 standout portfolios within this space to really unpack how completely different methodologies try to achieve the exact same goal, which is, of course, beating the market.
Moving right along to Section 2, SageOne, and their bottom-up stock picking strategy.
SageOne was established back in 2012, and it's led by Mr. Samit Vartak. Now, he brings over 25 years of deep private equity and valuations experience to the table, and honestly, that background explains perfectly why SageOne utilizes such a highly concentrated, deep bottom-up research approach. Backed by a 9-member research analyst team, they operate with a flexi-cap mandate aggressively targeting high-growth companies. They basically act like private buyers operating in public markets, meticulously building this incredibly tight portfolio of just 15 to 20 high-conviction stocks. They aren't trying to own the whole market, they literally just want a handful of the absolute best.
Now, check out this incredibly strict baseline they've established, 20%. To even be considered for the SageOne portfolio, a company must demonstrate a minimum of 20% compound earnings growth, alongside a return on equity strictly above 20%. It is a highly aggressive, deeply fundamental filter. No exceptions.
And because they are out there hunting for that aggressive 20+% fundamental growth, well, their portfolio naturally leans heavily into the spaces where that growth actually lives. The small cap space makes up a massive 59% of their allocation, followed by mid cap at 30%. Large caps, a mere 6%. So yeah, it's a high-octane engine built specifically to capture the fastest-growing segments of the market.
Which brings us to Section 3, Abakkus and the MEETS framework.
Abakkus was founded more recently in 2018, and it's driven by Sunil Singhania. He's a true veteran of the Indian markets who previously managed over $11 billion in equities at Nippon AMC. To really understand their footprint today, get this. Abakkus commands a staggering total asset under management of 26,545 crores. And this entire massive empire is driven by one very specific, rigorous proprietary philosophy.
That blueprint is known as the MEETS framework. It's a highly systematic 5-step evaluation. M stands for management, evaluating their quality. E is for earnings, looking for that solid growth. The second E is for events and trends, identifying disruptive catalysts. T is for timing, focusing on price and mean reversion. And S is structural, evaluating the sheer size of the opportunity and their competitive positioning. It's an incredibly comprehensive, 360-degree way to analyze a stock. And this brilliantly illustrates the difference in outcome between our first 2 managers. When you apply that rigorous MEETS framework, you end up with a much more insulated, conservative footprint compared to SageOne. Abakkus's portfolio is anchored by a dominant 47% large cap allocation. Small caps make up 26%, and mid caps sit at 17%. They are firmly anchoring their strategy with the absolute giants of the market.
All right, let's jump into Section 4, ValueQuest, and their scaling for growth strategy.
Established in 2010, ValueQuest is led by Ravi Dharmshi, who brings 23 years of deep investing experience, notably including time spent at the family office of the legendary Rakesh Jhunjhunwala. Today, ValueQuest has an incredibly robust footprint. What's particularly telling about their credibility
is that 41% of their AUM consists of foreign institutional money, which is a massive global validation. Backed by a 19-member investment team, they heavily focus on superior cycle management and capital allocation. And interestingly, just like Abakkus, ValueQuest relies on their own unique acronym to build out their portfolio.
Let's see how this builds out. They hunt using the S.C.A.L.E methodology. First, they look for scalable companies. Next, competitive advantage. They want cost leadership. Third, the business must be adaptive to economic downturns. Fourth, a long runway for growth. And finally, execution, superior management, and capital allocation.
Now here's where ValueQuest truly separates themselves from the pack. When their S.C.A.L.E framework finds a match, they do not hesitate. They commit heavily. They concentrate an absolutely incredible 91.6% of their portfolio into just their top 5 sectors. That is massive thematic conviction. Right now, that's being led by heavy bets in capital goods and pharmaceuticals. They are playing big, structural themes with extreme laser-like focus.
Finally, let's look at Section 5, Comparing Portfolio Risk Metrics. We've explored the distinct philosophies of SageOne, Abakkus, and ValueQuest. Now, let's bring it all together and look at the actual math. This data is absolutely crucial because it strips away all the narrative and just shows us the cold, hard reality of these frameworks. Look at the Sharpe ratio, which measures risk-adjusted return. SageOne extracts the highest efficiency here at 0.9, but it comes with a higher beta of 1.2, meaning it's going to be a bit more volatile than the broader market. Abakkus, with its large cap dominance, predictably shows the lowest volatility with an 18.1% standard deviation. Meanwhile, ValueQuest has the highest standard deviation at 22.1%, which honestly makes perfect sense given their intense 91.6% concentration in just 5 sectors. You are literally seeing the mathematical proof of their investment styles right here on the screen.
So the crucial point here is understanding how to actually utilize these tools. While all 3 are top-tier institutional funds, they serve entirely different functions in a broader asset allocation strategy. SageOne is your aggressive, concentrated, small-cap growth engine. It's built to accelerate. Abakkus, on the other hand, acts as a balanced, large-cap dominant structural core. It's built for stability.
Each of these managers, Vartak, Singhania, and Dharamshi, has engineered a totally distinct, proven architectural blueprint for wealth creation. They've shown us that there are absolutely multiple valid paths up the mountain, whether it's through deep small-cap value, structural large-cap evaluation, or massive thematic concentration. And that leaves us with one final, provocative thought. Looking at your own capital, which of these frameworks best aligns with your portfolio's ultimate destination? Thanks for joining me on this explainer. Keep learning, and we will see you in the next one.